Go ahead and get started. This class is being recorded. Today is Monday, September 19th. This is the 8 a.m. section. Starting today in this section, attendance is being taken. So again, if we have a live class, we'll be taking attendance. If I don't have a live class, obviously won't be taking attendance. But when you are here, just make sure you sign the sign-in sheet, which is being passed around the room at the beginning of class today. And then again, it'll be passed around on Wednesday, right, and going forward. Right. So today, really, I want to go through homework 3, make sure we understand the solution and any questions about EIC, because 1 week from today, you'll be doing your EIC presentation for a grade, right, as a group. Right, so it'll be worth 10% or 10 points towards your semester grade. Basically, all 6 teams in this section will be presenting. Everyone here, whether you're presenting or not, should help in creating that presentation. And obviously, everyone has to be here for that presentation delivery. In terms of the presentation itself, you can decide how many team members you want to present. Okay, you're going to have 10 minutes. Obviously, I wouldn't have 8 people trying to present in 10 minutes. That would not be efficient. Remember, there's going to be 4 presentations over the semester, 1 on EIC, 1 in a few weeks on historical, 1 on valuation, 1 on multiples. So you can kind of rotate who's actually delivering the presentation. But as I said, your entire team must work to prepare that presentation and be ready to give that on Monday, 1 week from today. All right. Basically, what you're going to be covering in that presentation is I'll be sitting kind of over there. You guys will come to the front of the room. You'll be presenting off of this main computer here. Many people will use Google Docs for their PowerPoint. But basically, what you're going to do is cover everything that was in the last 2 homework assignments that you did in writing. You're just going to do as a group verbally. Okay? So you will need to, though, have a PowerPoint. So one of my rules, just out of fairness, since you're all basically presenting the same material, is that if it's not in the PowerPoint, it doesn't count. Okay? So if you don't have data, then you're not going to get credit for things. If you forget to put the data in the PowerPoint, it won't count. Right? And that's also just for fairness, because the teams that go first might have forgotten something that the teams later realize they forgot something that teams went first did, and then they'll try and make up for it. Okay, so the point is, if it's not in your PowerPoint, I'm not going to let you make up for it. So let's say you forgot to do a screenshot of the industry beta or something like that for one of the segments. So just because you're talking about it, I'm not going to give you credit for it unless I see it. Or you can't jump out of the PowerPoint and show me something that's not in the PowerPoint. Okay, so if it's not in the PowerPoint, can't jump out of it, show me anything else. That'll be true for any presentation you do this semester. And again, you have to have the data and use numbers. Very important for your grade to use numbers when you're going through that presentation in 10 minutes. Okay, so again, the presentation will be on EIC. First, you're going to cover the economy, then you're going to cover the industry, then the company. At a minimum, you're going to need screenshots for the markets RV beta for each of the segments that it's in, right? You're also going to need, remember we're doing it on Dentsu, and then you're going to need the for the industry spreads for the I and the C, okay? And then basically you'll talk about current 5 forces, future 5 forces explaining the spread, current competitive advantage, relative spread, potential future competitive advantage. All right, so it's a lot to cover in 10 minutes. If you need to read off of note cards, I'm okay with that. You don't have to come dressed up, right? In fact, today you can see I'm semi-casual. I'm not worried about that. If for a professional presentation, sure, do that. But for here, what I'm more concerned about is not how you dress, but what you say. Okay, so just make sure you come prepared. Now, if I start asking you questions in the middle of your presentation, assume that's a very bad sign, because that means you probably forgot to do some things that I'll be asking you about. But otherwise, I'm going to let you guys go through the presentations pretty uninterrupted. All right, questions about the presentations 1 week from Monday, 1 week from today. Hopefully fairly clear. All right, so the other thing is the Bloomberg Trading Challenge should have started, and all of you should start have invested through today, so you can't have more than $300,000 worth of cash today. So again, for your team captains, just quickly look at the teams. So let's just take, we'll go in team order here, just all the sections since I'm recording this on video. So basically, here is section 101. So again, you can see that the number of longs that a team has traded. Remember, by the end of the first half of the semester, we must have at least 10 longs. So even though this team only has 6 longs, that's okay. They have another few weeks to do it. Again, where it says available cash, no one can have more than $300,000 of available cash. So I see we're all meeting that requirement. And again, or at least in this section, 101. So basically make sure that you, again, going forward, if you sell something, that you buy something at the same time. Okay, so just stay out of cash for the rest of the semester. And then the way that you're going to be scored is on portfolio value. So obviously the market was not very kind at the end of last week. And so if you're putting money, and again, a lot of the students tend to go into tech stocks early on because that's what you kind of know and excited about. They've been getting hammered recently. So it's not a surprise that a couple students lost money, although it's pretty interesting that this team's already down 11% in the first week of trading. But regardless, it's not where you are today, it's where you end up. That's section 101. Let's just look at quickly 201, which I believe is this section. All right, 1, 2, 3, 4, 5, 6. Okay, so all 6 teams are here. This team and this team buy something today, okay? Because you guys are both slightly above 300,000, and so it's not 300,198. You're close to the line. It's either you're at below or you're not. So anything that starts with a 3 above it is bad. So just buy something sometime today to get out of cash. All right, but at least all the teams have started trading. In terms of here, portfolio value, again, is how you're going to be scored. And again, questions about this section? We're here. 201, let me just check 301 real quick. And 401. So 301, 1, 2, 3, 4, 5. Okay, I only count 1, 2, 3, 4, 5 teams. That means one team has not bought anything yet. Okay, that's going to be very bad for your group if you're listening to this on the video. You got until the end of today. Today is Monday to start trading because the trading competition started last week. Okay, so you have to start trading in your trading competition. So if you're listening, find out who that group member is. Make sure they come to the Bloomberg Lab sometime later today. All right, and again, for this team that has 301,000, remember the same rule. You got to be under $300,000 by the end of today. Okay, and section 401. 5, 6. Great. Everybody has started. Everybody but one team is meeting the available cash threshold. They're $97 over. So again, by the end of today, buy something else. Again, you're going to be scored on portfolio value. See where they are. All right. So any questions about the Bloomberg Trading Challenge? Any issues with it? Yes?
So if we're not like the leader of the team, do we have the access to the data, like to this page?
Yeah, the leader, your team, whoever is registered with the Trading Challenge has access to this page.
So like we don't have
The rest of the team does not, unfortunately. And that's just a Bloomberg thing, meaning Bloomberg doesn't give it out to the participants. And so they just made me an administrator so I can see it. So I can see everything, but you won't be able to see it unless you're registered for the competition. And only one person per team can be registered, just the way that they've set up the software. So, yes?
what is the relative P&L mean?
So what you can do when you trade is you can set up, for example, the S&P 500 index and basically see how you're performing against an index. So if you just put your money in the S&P 500, you put your money in your portfolio, how are you doing relative to the index? Are you making more than what the S&P is doing, or are you making less? So it's just relative to index. But we don't care about that. As I said, the only thing we're going to care about this semester is portfolio value. Right? And again, some other trading software out there will look at risk adjusted. We're not risk adjusting. Right? So it's just pure cash. Right? You're a portfolio manager, go make money. Right? Any other questions about the competition? Or the group projects? All right, so let's talk about homework 3. So today, should have turned in your assignment, homework 3, by this morning. And I had given you a company that hopefully everybody at least heard of before called Microsoft. Okay, so this is the one that we're doing our second EIC on. So back to the E, you would have come here to Bloomberg. You'd have gone to Microsoft, U.S. Equity. Oh, one other thing. Your Bloomberg certification was due on Friday. Any issues? Anybody have any issues? Hopefully you didn't. I didn't hear anybody from over the weekend, but you guys are all certified now? Okay, great. Since you're certified, as I said, you should be able to download that PDF from either the terminal or the website saying that you're complete, and you can now put it on your resume that you are Bloomberg certified officially if you're certified. So again, if that helps you, please feel free to take advantage of that. All right, so back to this. I am going to mention one other thing, which I don't know if it was in the certification or not. So just before we come back to Microsoft in a second, one of the other very powerful features of Bloomberg, which you can use to your advantage in the recruiting process, is something called PEOP, PEOP, which is people search. So people search is the ability to search every Bloomberg user in their database. Okay, so if they are registered with the system, you can find them in PEOP. And so, did you guys learn about this in your training? Was that one of the training modules? Okay, so I think it was like a directory of people, right? So the point is, I could say, okay, I am looking for, and you can put in, for example, a company, Goldman Sachs. There's everybody that works at Goldman Sachs that's on Bloomberg, including their contact information, right? So for those of you who are a little bit more aggressive in your recruiting, if there's somebody that you want to start calling or emailing or contacting at a firm that you're interested in working at, you have their contact information. Okay? So just letting you know. So if you're interested in getting a career on Wall Street, I can tell you it's not easy and it's very hard to get in the door, right? But you can go past the door to people. Now, they won't like it, but then again, could be worth a shot. So just letting you know, you can always do the same thing. I could search for all University of Maryland graduates that are working at Goldman Sachs. So it's not going to be many of them, but I can basically reach out to a fellow undergrad that maybe got a job at Goldman 3 years ago, say, hey, can you hook me up with something? Again, may or may not be something you're interested in, because it would be a very useful, aggressive tactic, but it is something available in Bloomberg. So just letting you know as you guys go through your recruiting season. All right, so back to this. MSFT U.S. Equity. All right, so RV, and then we said for the, give it a second to load, comp source, we were choosing the best fit algorithm, and the reason why is because when we do that, it had both segments, which was infrastructure software or application software. Okay? So you'd have gotten this list if you chosen whole firm. And then the other question that I got was Bloomberg defaults in the RV list to the country of domicile. And since we're generally looking at U.S. companies right now, those will be U.S. companies, right? And then the question was, well, should we use a different list for Microsoft, right? So should we use the domestic list, or should we use, say, global developed list? Which obviously would take some European, some Asian firms that otherwise wouldn't have been on that list and throw them on that list, right? So what do you think the answer is? Which list should we have used? Because I didn't really say. Should we use global or should we use domestic? Yeah.
I think domestic.
Okay. Why do you think we should use domestic?
Well, I guess it depends on also like how you define industry, but for me, I said the U.S. like sales within the U.S.
So it does depend on how we define the industry. And so that's the point we have to start to think about. Is Microsoft a global firm selling global software? Or is Microsoft just a U.S. firm selling primarily to U.S. companies? So how do we define their industry? Is it more global or is it more local? Like, who are their competitors? Like, even Microsoft thinks of their competitors. Who are their competitors? Who are they competing against? Are they just competing against U.S. companies? Or some of their bigger competitors more outside the U.S.? That wasn't a rhetorical question. I'm actually looking for an answer, yeah. Yes?
I mean, like Amazon is one of the biggest competitors, and Amazon is a global company. So, I mean,
Yeah.
I would say global just because.
So this is why last week when I said that I expect as we go through this class that you're going to think, like, I want you to kind of think about some of these things sometimes. Like, what would be the better industry to compare them against? And if you start reading the reports, you're going to see that not every company that's listed in some of their reports is U.S. So they're competing with companies like SAP, right? Especially on the enterprise service business and the cloud. Increasingly, the cloud is not just U.S. clouds. Other countries are building their own clouds. And so Microsoft is essentially competing with that with Azure. And so when we start thinking about it, and they're going global. They're not just a U.S. company. They're trying to do Azure globally. So, and obviously Windows is pretty ubiquitous around the world, as is the Microsoft software. So, long story short, I probably would choose global over country of domicile if we were doing a Microsoft EIC, right? However, for purposes of grading this week, I'm going to instruct the TAs to say either one is fine, right? But nonetheless, this is what I'm saying, like as you kind of go through some of these assignments, I'll sometimes give you guidance to say, use this exact list, but sometimes I'll leave it open, and if I'm leaving it open, then it is somewhat open into your interpretation of what you think is most appropriate, right? And if you have trouble thinking about what's most appropriate, you can always ask. Talk to the TAs, talk to myself, talk to your group members, you know, hey, what do you think you guys are using? That part's okay. Like, don't turn in the same paper or somebody else. Obviously, that would be plagiarism. But regardless, we should be kind of thinking about these things as we're kind of analyzing. Because what's unique about this class that you haven't done anywhere else in your undergrad is this is the most real world you've ever been. So I'd like real world analysis on real world companies. So in the real world, it's also messy. Like there's not always right answers to everything, and that's okay as long as we kind of think it through logically, back it up with facts, and then kind of do the analysis. Right? Now, don't go completely off script with some of the things I'm asking you to do. But regardless, I think I probably would have chose this list for Microsoft rather than the last list, just because they are competing with some international companies. Right? So back to this, I'm also not looking at the whole firm list. Okay, and that was the other key point, is that Microsoft, as we click on the drop down here, we see is in two different segments: infrastructure software and application software. Right? Think of infrastructure software as like the cloud, right? And application software being like Windows and their traditional Microsoft Office. So essentially, if I click on infrastructure software, then obviously, number one, I get a different list of companies, and number two, the industry averages are going to be different for each of these segments. Right? So then we'll go to markets. And then beta for our screenshot. And as we talked about before, the one we're focusing on is the raw beta, right? Which the industry average is 1.21, Microsoft is 1.16, okay, because that's what we're going to use for our E analysis. Now, just while I'm on the screen, let me just show you. If you'd chosen local or country of domicile, which is basically the same, notice that Microsoft doesn't change. That's actually the country of domicile. That's 1.21, and then global developed industry average still is 1.21. So it looks like the betas don't really change depending on which segment you did. Okay, so we'll go back to our global developed list, and notice that Microsoft's never going to change. Even if the industry average changed, the company itself doesn't change, right? Because when you're doing an EIC on a company, unfortunately, we can't say what's the beta of just Microsoft's cloud business, right? Because they're all rolled up into one company, right? That's what makes conglomerates, for example, very difficult to analyze, right? Because they don't really have a pure beta towards any industry. They're an amalgamation of multiple different industries. It's one of the reasons why analysts don't like conglomerates anymore. They're very difficult to find pure sets for and very difficult to analyze, right? So typically when you look at any company, you're looking at the combination company against various segments. But that's not ideal, but unfortunately it's the closest that we can come because, unless you're a pure play company. And Microsoft's not a completely pure play company, as you can see, even by the segments that it is in. All right, so we go here, we take our screenshot, we're submitting this. And so how would we answer the question about minimum, as I would say, economic sensitivity? Is this industry economically sensitive? And is Microsoft more or less sensitive than the industry? What is the answer to that question? Yes, sir.
I said that the industry is, due to the beta of 1.21, higher than the S&P market of 1, greatly down to like macroeconomic forces.
Yeah, so what do you think makes it more sensitive? So the first part is you got the technical part right. So now it's why do you think it's going to go up and down faster than most companies?
Like I read in the FICO report that they were expecting inflation, especially in Europe, to bring down IT spending, which could obviously harm the industry. So forces like that. And as for Microsoft as a company, they are, with their 1.16 beta, which is less than 1.21, they're less sensitive than the market market average, or the industry average, sorry, but still more so in the overall market. And that difference could be explained to like their scale and diversification into multiple industries.
Okay. Matter of fact, it's not this company, but I'm actually doing a presentation to a senior leadership team in a couple weeks on inflation and the impacts that it might have on their industry. Okay, and they asked for an opinion on that. So the point is a lot of companies are very nervous about that, particularly because they think it might affect them and people's buying patterns. So again, that's probably one of the reasons why, as you said, that we're looking at some cyclicality here. And this is the cloud. In terms of what people are willing to spend. And by people, I'm talking about who are Microsoft's customers for the cloud. Are we looking at the business? This is B2B or B2C? This is more of a B2B industry, right? But nonetheless, this is a something that is a little bit more economically sensitive. All right. So if we switch over here to application software, what's different here? What's the beta with application software relative to the infrastructure business? It's higher, right? Right? Why? Why is this market with the beta industry average of 1.26 more economically sensitive than the infrastructure market? And by the way, if we'd gone to country domicile, See if this changes again. And it still says 1.26. So back to this. Why is this one more sensitive? Why do you think? Yeah.
I guess, is it because, like, similar to what he was saying, with, like, consumer spending being down? Is it just because this industry is kind of, like, more reliant on, spending on stuff like an Xbox?
Yes, I think this segment of the industry is probably a little bit more B2C, or at least small business. SME is usually the acronym we use, small and mid-sized enterprises. But the idea is that it's probably a little bit more sensitive, particularly even in these tougher economic times, to spending. So that if inflation is high, if economic conditions are a little tougher, you kind of live with the older stuff, you don't spend as much on the expensive hardware, the licenses, etc. And so therefore this segment is probably a little bit even more economically sensitive than the cloud business, than the infrastructure business. And so that's probably why you're seeing a little bit higher of a beta, right? But nonetheless, both segments definitely have some ups and down cycles. And we're starting to see that in the stock market. And there's a reason why the team last week, that if I had to bet, that lost a bunch of money, that we're looking at the stock trading competition, probably put some money into tech stocks. And they were some of the ones that got mercilessly hammered because, we're not seeing that growth. I mean, look at Facebook. Facebook's down, 30-40% over the last year? And same thing, is that it's just a straight line up. We're starting to see that people are changing their patterns in these tougher times, and they're not just always buying technology anymore. And so that's probably a transformation we're seeing in the technology industry that we haven't seen historically before, that this industry is starting to become much more sensitive than it ever had been. So it was always had a high beta because it was always just outperforming. But now that for the first time in a long time we're heading into a potential recession, we're starting to see the other side of it. We're starting to see some downside risks to these tech stocks. So in any event, where does Microsoft stand on this? What do we say about Microsoft relative to everybody else? What's their beta? 1.16, right? So Microsoft in both segments is less sensitive. What makes Microsoft less sensitive on the E? Yeah, yes, sir.
I just think because they're just such a big company and they have so many already existing contracts, I just feel like they're less volatile than maybe other smaller companies in the industry because they make up a large portion of the market cap. So obviously the other ones are smaller and more volatile, so it's just going to be steadier. So I think that's why they're less.
Okay, so a little bit, if I could just paraphrase, is their diversified portfolio by being so big. Okay. What else that might make Microsoft a little bit less sensitive? What's your presentation going to be using what software on Monday? I mean, it's PowerPoint, right? So, I mean, if you think about it, Microsoft is pretty ubiquitous. And we go into recession, you're still going to use Word, you're still going to use Excel, you're still going to use PowerPoint, you're still going to have a PC which has Windows on it. And so I think in terms of new products and software, okay, people may buy a little less, but it's not like they're going to go away from Microsoft. I mean, there's pretty close to a technology staple with their core business as you can get. Now they have some competitors coming in, Google, for example, trying to encroach on their Office business, but it's a pretty steady cash cow for the company. And they've now moved almost to a subscription model so that you get Office, you're going to pay them $100 a year, per user or more. And it's just kind of pretty steady revenue, right? And so again, if you think about it, I think that probably is one of the reasons that it makes Microsoft a little bit less sensitive. Xbox business, that's a different story. Xbox sales seem to be plummeting right now relative to what expectations were. But their Windows business, as much as long term, it's probably not growing. It's a very mature cash cow, but it's a big cow. right? And that's something they've relied on to generate a lot of cash historically. All right. Questions about the E? All right. So then we move on to the I. So back to RV, we go to custom, and then we look at our spreads. And so you should have submitted, again, if you have a global list, then it should have looked something like this once it finishes loading. Okay. So what would we say, just purely, is this an attractive industry? Does it create value? And how is Microsoft doing relative to its peers? How would you guys answer that one? Is this an attractive or an unattractive industry? You swipe right, you swipe left. Yeah.
It's an attractive industry because the average ROIC of 20 to 24 is greater than its average WACC of non-full-time women.
Great. And how is Microsoft doing in this attractive industry?
It's doing better than the industry average because its ROIC is higher at 39.7 and its WACC is slightly lower at 9.63.
Yeah. So it's got a better spread than the industry because of that. Okay, good answer. So Microsoft is doing really well in a very good industry. Okay? And this is when we talk about application software. All right. So now I'm going to switch to infrastructure and basically address the same question. There's a lot of companies on this list, so we'll just crunch through them here. So what can we say about infrastructure? Basically similar thing. That Microsoft is outperforming the industry, but the industry is still pretty attractive because the industry, as of the latest filing, has a 25.04% ROIC against a 9.75 WACC. Right, so that's really good. And Microsoft has the same spread, 31.7 versus 9.6 is still a much higher spread against either one of the segments that they're in. Okay, so Microsoft seems to be outperforming both of their industry representations that we are looking at. Right? So, starting with infrastructure, what makes this such an attractive industry? Which of the 5 forces are favorable versus unfavorable and neutral? Obviously, we think more of them are going to be favorable. So using the 5 forces, why is this industry making essentially a 15-point spread with a 25% ROIC? What'd you guys say? Yes?
I said that firepower is low because there's like high switching costs. Like although there might be like different options, like a company is less likely to switch because they're committed to that relationship, and also the costs may be high.
So once a company kind of commits to a certain level of infrastructure, it's not easy to just change it all out. Okay? So that tends to help the companies in the industry. They kind of lock you in. Yeah.
Is it okay if we kind of like combine like the like high barriers to entry to like lack of substitutes?
Absolutely.
Because I kind of like
Yeah.
think about those in two.
Yeah. And some people might say, for example, buyer power might be a rivalry issue. They could also tend to overlap. But elaborate. So what did you see as being favorable?
Like I think it was like last week's on the other one. It was like when you like separate them, you end up saying like a similar thing.
Mm-hmm.
So I was like, I think I said for mine that it was like it's best explained by like lack of substitute, customer power, and high barriers to entry.
Okay. So the barriers to entry, what makes the barriers to entry high? Just out of curiosity.
Microsoft has a high market concentration of market share, but if anybody were to threaten that, they buy them out, I would say.
Okay. That could make barriers to entry high. What else makes barriers to entry high in this industry? Yeah.
Research and development.
So there's a lot of cost to the people, the R&D to do this at enterprise scale. But just elaborate, keep going with that. How does that also create barriers to entry? The skilled software developers, but if you do all that R&D, a lot of it could be patented. Some of these big tech companies have thousands and thousands of patents every year that they're filing, which makes it really hard to copy their code exactly, right? And then you get into a lot of legal issues around that. So that tends to help the bigger companies that are more established. The other thing that tends to help the bigger companies is their brand, okay? But this is actually a very brand sensitive industry, because think about it, if you're a big company, you know, do you really want to go with a startup that I'm going to use to kind of run my mission critical, you know, day-to-day operations? So to some degree, you know, back in the day, it'd always be like, you know, you can't go wrong buying IBM. There's a version of that. Well, today it's almost like you can't go wrong buying a Microsoft. You can't go wrong dealing with an Amazon. You can't go wrong with dealing with Oracle. And I think that tends to help the bigger companies. And that's probably a barrier to entry, because even though you do see a lot of venture-backed startups, you don't see a lot of them going to enterprise scale for some of these infrastructure products. All right. Now, for maybe individual software products, different story. Like I might use a Canva over a Photoshop as a small business, all right? But go into the cloud, go into some of these enterprise application software things for CRM, for email. There's just a few big players that are very dominant, and it's really hard to kind of overcome that and just become the next big one, whatever you're trying to do. So back to this business, barriers to entry are pretty high, okay? Substitutes seem to be relatively low because of that, all right? What about the rivalry? Is rivalry really intense? Yeah.
I said that Rivalry is intense among like a few big players, but other than that, it's kind of low because you have Microsoft, Amazon, Salesforce, like those kind of companies that are already huge, just like fighting over increasing their market share, and some of the smaller companies are kind of left,
Yeah.
fighting further in.
And by the way, when you say there's just a few big companies fighting, that almost sounds oligopolistic, where they're not really fighting too hard against each other because they're competing on things, not price, right? Because that's the point. I'm going to fight, but I'm not going to cut the price down to close to zero and give it away. Why would I want to do that? And so essentially they fight, but they don't fight to the death over price. This isn't a price-based industry. Now, don't get me wrong, technology, you know, companies look at it as a way to save money, but nonetheless, once that software is developed, the actual cost of the next installation is close to zero. And so that's the point. Like, it's a high fixed cost industry, which generally, when there's too much demand, too much supply in a high fixed cost industry, you could lose a lot of money. But these companies, I wouldn't say that they control the supply, but nonetheless, they're not fighting over that supply and trying to just drive the price down to the bottom yet. That could change in the industry, but nonetheless, we haven't seen that type of behavior. So the rivalry, probably not too intense. And that's another reason why we're probably seeing a little bit higher rates of return amongst the bigger players in the industry. Okay. What about supplier power? Who are the suppliers to the infrastructure industry? Anybody do an SPLC just to kind of check out a few? Using Microsoft as a proxy. Who are some of the suppliers? What does this list tell you about Microsoft suppliers? Because remember, we're on the infrastructure side of their business. I mean, essentially, if you're building the cloud, yeah.
None of them are really like dominant. They're all
Yeah, but there's a bunch of hardware people on here. Why do you think there's a bunch of hardware people? Yeah.
Maybe they're really like their servers and stuff to maintain the cloud.
Yeah. And so in this market, as you said, a lot, you look at the brands on there, they don't seem like the high priced Apple like brands. And so this industry a little bit more commoditized. So the back end of the cloud is a little more commoditized, but you don't even see it, because that's the point. Like, you don't care about the cloud, you just know there's a cloud that's working. And so this suppliers don't seem to be exhibiting a lot of power over the cloud-based infrastructure providers right now. So we kind of think about, what sets up this industry to be so attractive. They have basically the hardware suppliers, which are a little bit more commoditized, are not exhibiting a lot of power or threats over the infrastructure business currently, right? We don't see intensity of rivalry in this industry at this point in time. We see kind of the bigger players that are competing, but they're not competing on a huge price amount. And we tend to be brand loyal to these big players, and we don't really switch our infrastructure once it's in there, which creates the switching cost that you mentioned, and to some degree gives some barriers to entry to make it harder to come in and rip some of your stuff out and replace it with stuff, which also tends to mitigate some of the rivalry. It also, in the enterprise business, something you don't think about a lot, but it's harder for smaller businesses to get in there. Okay, because the first thing let's say that you want to sell enterprise software to Delta Airlines, okay, and you're a small business startup. Well, one of the things Delta's going to say is, okay, what other enterprises are you currently in? And the answer to that question is going to be no one. You're my first. And Delta's not going to probably want to go first, because these people, when you're talking about infrastructure software, tend to be a little bit more risk averse, right? The customers themselves, right? Because if I'm going to rely on mission critical software to run my business, it's got to work, and it can't go down, and it can't have problems, it can't be buggy. So, not saying that the big companies can't have problems too, but it actually makes the startups to kind of prove themselves a little bit harder into the enterprise market for that reason. And that tends to mitigate some of the competition and favor, again, some of the bigger companies, right? Because like it goes back to Oracle has been there, done that with thousands and thousands of big companies. They're already in there worldwide. You're competing as a startup for the first time to go enterprise. It's hard to take out Oracle, even though you might be cheaper, because the real cost, if something goes wrong with my system, is not the cost of your software, okay? And that kind of entrenches some of these big companies in the industry. So that makes the substitutes a little bit less viable at this point in time, and to some degree takes away some of the buyer power, right? Because even the buyers are kind of embedded with the companies that they have chosen, right? So again, tends to be favorable to Microsoft. And I think you could say the similar thing if we switch to the application software business. So if we go to the application software business, what about their 5 forces today? What did you say about their 5 forces? Similar or different than the infrastructure? So this is software, including consumers. What did your 5 forces say there?
I might be wrong, but I said they're pretty similar.
Okay, I don't doubt that, but why do you think they're similar?
They're both like providing a non-physical product, so it doesn't you don't need like a bunch of wood or whatever to make.
Okay, but talk in terms of the forces. What forces did you say were favorable for this business and why, even if you're saying similar things? So which of the 5 forces were favorable in the application software business?
Again, like the threat to new applicants is pretty low, as it's going to take a lot to overcome Microsoft or take market share from that. It's going to take a while for companies to actually trust what you're putting out.
Okay, so back to buyer power. Do we have a lot of buyer power in this industry? Do the buyers have power? Maybe more than in the infrastructure business, but I wouldn't say it's huge amounts of power, especially for the scale businesses. Because like I said, for a lot of the core big applications that we use, I mean, yeah, you got Microsoft fighting with free Google for Google Docs and stuff, but even Google Docs has not made huge inroads into that business historically. And so again, same thing, Salesforce, you gotta talk about Salesforce. There's been a lot of CRM upstarts, but a lot of them have not made a lot of, headway into displacing Salesforce, particularly on the corporate side, even for smaller businesses. So generally it suggests the buyers don't seem to have too much power relative to the players. Players, generally the bigger players, do have some favorability. Although this market probably is more sensitive to upstarts, I think the barriers to entry are lower in the application software business, because you really can become, somebody with a web-based application that's browser-based that can get out there, particularly on the consumer side. Okay, so that tends to be a little bit more unfavorable to the industry, is that you can have the startups in this market that you wouldn't have in the infrastructure service business, which probably leads to a slightly lower rate of return, which if you look at the market cap weight average, I believe this one's a little bit lower than the other one, and it's probably because of that. Yes, sir.
So there's like less patents in this industry versus the other, you would say?
I would say there's less. I don't actually know the answer to that. We'd probably have to go research that. There's probably patents on both sides. But generally, for consumer products, there's a lot more consumer products, put it that way. So that does suggest that the patents aren't as strong at preventing people from doing all of these consumer products. Okay. All right. So here's the real question. What's going to change in 5 years about either of these segments? Let's start with this business, since we're already talking about this. What's going to happen with the application software business, 5 forces in 5 years? More favorable, less favorable, industry stay about the same. What do you guys say? Yes.
I said it'll probably remain the same with Rivalry probably increasing a little bit more because there's applications I feel like are more easier to make than infrastructure software, and so more competitors might want to come close to the same.
All right, so if I were presenting this next week and I were to interpret her answer, I would have my slide up there saying, in 5 years, buyer power neutral, suppliers neutral, barriers to entry neutral, whatever the fifth, Rivalry is the one you said is going to increase. Rivalry increasing, so probably a slightly lower spread, but still a pretty high spread, something like that. Right? So that's the idea. Like, you still want you to address the other forces even if they're not changing, and you're talking about the ones you think are going to change, but nonetheless talking about all the forces, even if it's not going to change. All right. But does anybody else think any of the other forces will change in 5 years here? Yes.
That was more a question back to what you just said about the PowerPoint. So like before last week, you said, it's only 10 minutes. You probably should only address the few major forces.
Correct.
On the slide, do you still want all 5, but the ones that you're not talking about, like neutral or not changing?
Yes.
Okay.
Just so the data's there. So that's the point. I would have almost, think of it this way, I had 2 graphics on my slide, current 5 forces explained, future 5 forces kind of explained, summarized, and then you could use arrows. You could have like an up arrow for worse or better, neutral arrow or something like that. And so even if you're not talking about all 5, you just kind of pick up what she just said. Hey, Rivalry, all the other forces aren't changing. You can see that on my graphic, but this is the one that I think is going to be the most important, something along those lines. All right, so that goes back to at least you're addressing it. Okay, so you don't have to address it in every single word that you say. Combination of what's on your slides could also help you do that, but make sure you at least address all of the forces on the slides for both the today and the future. Does anybody else think anything will be different, similar to what she said, in 5 years for this part of the business? Yeah.
I guess for to go with Rivalry, also the barriers to entry and substitutes. I saw something about they think during a recession and in the next few years, the companies that are prioritizing IT security are gonna have higher gains. So I guess that opens some more Rivalry for those industry segment
Okay, so that could lead to more rivalry in the industry. I think one of the other things that you're starting to see in this side of the industry is the innovation that's coming from the smaller entrepreneur is becoming more widely accessible, which in a way is related back to that infrastructure business. Because the cloud is becoming more ubiquitous, it's easy to scale up as a smaller business, and that's helping them. And also, I think we're seeing another wave of innovation, meaning as 5G, the original promise of 5G, the interconnectedness anywhere, is going to give even more application opportunities for newer firms to come into this marketplace. The existing firms are going to go out there too, but like we're going to the next generation of what we're using the internet and all the application for, with a level of interconnectedness that we've never had before. And I think people are going to start taking advantage of this in ways that we still are seeing emergent on a go-forward basis. You know, and just as an example, like one of the things that has made electric cars not do the self-driving mode that Tesla is perfectly capable of doing today is the roads aren't ready for them. Okay, but one of the things that they're talking about the next, I don't know if it happened in 5 years, but they're literally building smart highways so that the highway is talking to the car and letting the car know what's happening. So instead of just reading the white lines on the road, they're putting in chips and data transmission into the highways so that it will basically tell the car what it needs to do and kind of work on a more coordinated basis. I'm just saying that's going to just open up whole new avenues to what people are going to be able to do. That's just one simple example, but that's the point. Like we're heading towards continued innovation, and when there's innovation, there's disruption. And when there's disruption, there's new opportunities for new and emergent players. So I actually think, in a way, barriers to entry are going to change a little bit in this industry over time and become a little bit more favorable to the people that are driving the innovation. Okay? And that could lead to different companies on this list in a number of years that are much bigger that you don't see today. And I think that becomes more favorable. Now, I don't think that's going to hurt the industry spend as much, because when we go into these new segments, I don't think the buyers are going to have huge amounts of power, and that they're not going to give this stuff away for free. And I think that this industry has historically made a lot of money. So I think the industry spreads will stay high, but they're going to do it through innovation and continuing bringing us unique or new or different things. But again, I could be wrong. Again, that's the whole point of this. And to me, the exciting part of this is you can actually start to outlay different future visions for what you think is going to happen in the industry. Right? Same thing is probably true of the infrastructure business. Like, is anything going to change about the 5 forces in the infrastructure business in the next 5 years? Are these 5 forces same, more favorable, worse over the next 5 years? I mean, the buyers are going to have more or less power. Are the big companies going to have more or less power over these companies? Are we going to see a lot more of these big infrastructure companies in the next 5 years? Is there going to be more rivalry amongst these infrastructure players over the next 5 years? Yeah.
I think the bigger companies will continue to have more power just because they have the money to kind of go kind of dive into the cloud business and really like expand it and capitalize on it compared to some of the companies that don't have the same amount of funding that they do.
Yeah.
And so the leading players in the cloud business today, I think will just expand their market share and get a higher spread in the future.
So therefore, the oligopoly gets stronger. Actually, one thing in the U.S. that may or may not affect this is there is legislation that's working its way through Congress, Republicans and Democrats favoring it for different reasons, that are basically saying the tech companies have too much power and we need to, quote unquote, break them up, right? Republicans are doing it for social reasons. Democrats are doing it because they're worried about big companies. But either way, there is this notion that these firms are getting so powerful and so entrenched that they're almost like, historical oligopolies. Oil industry when it was broken up, rail when it was broken up. Does tech need to essentially be broken up? Because they're getting too big and too powerful. But if you look behind that, what's behind that is because it is stamping out Rivalry, because the barriers are getting so high to get into this marketplace, and because their returns are so strong that it's become very, very profitable for these firms because they're so dominant. Okay, so again, government intervention might be something that could change this, right? And then we have to reshuffle the whole deck, right? Now, whether or not that's true in the next 5 years, my personal feeling is we are so paralyzed as a government that we probably won't, as in the U.S. But nonetheless, it is something that could change if the government were to intervene into these forces, particularly for some of these big businesses. But this business itself, as I said, I don't think the buyers are going to have much more power in 5 years. Kind of going through the industry reports, cloud is going to continue to experience lots of growth, and the companies that are supporting that are still going to do very, very well. So I think the industry spreads are going to stay about this level in 5 years. So it's a good time to be in this industry, longer term. All right, Microsoft has competitive advantage, clearly. All right, why? Why is Microsoft has such competitive advantage? Yeah.
Like we said earlier, the diversified portfolio, they're in a lot of different, areas. It's not like one thing drives all their revenue.
Okay.
So even in, this time of like down spending, they should still have growth from certain segments.
Okay. What else?
And also it's brand name. So like because it's Microsoft, people are more likely to trust it, that you trust this product.
They have a tremendous brand name, and that gives them tremendous customer loyalty. Yes.
I said they have a competitive advantage over their suppliers. I was looking at the SPLC, and they don't have one more supplier, so they can easily just be like, oh, if you don't like our price, we'll just leave and go to business with someone else.
So they have some ability to leverage their size over their suppliers. Yeah.
Also read that they took over the most market share in the cloud business from Amazon recently. So if you take over one of your bigger competitors, how probably do you?
So and again, the pie is growing so fast, but Azure is one of the key players in that, and they have good technology, and they protect it with a lot of patents. But back to the other thing is they really have a cash cow. I mean, Windows is a cash cow. Office is a cash cow. And, we have not seen successful competitors truly displace that historically. And I think it goes back to, as you said, it's the brand. It to some degree, the switching costs play into Microsoft's favor for competitive advantage because they're first. And because they're there first, it's hard to tear out the entrenched competitors in the technology industry, right? Just the switching costs are too high, and that plays in Microsoft's favor because I think they actually build switching costs into what they do. Because they make, for example, their Office works really well with Windows as opposed to their Office working well with Linux or other software. So it kind of helps force you back to the Windows PC. So it forces people into that Microsoft ecosystem. And I think that ecosystem is to their competitive advantage because that's the other point. It's a big ecosystem. And so therefore it's hard to change a system. All right, so that's the point. These companies are building systems, ecosystems, not just building software. And so if you're part of an ecosystem, just as an example, you ever wondered why it's so hard for another social network to displace Facebook? Just to give you an example, I'm talking about ecosystem. Why can't they displace Facebook? Why did Google fail to displace Facebook with their social network? What's the problem? Yeah.
Everyone's already on Facebook. And
Exactly.
Their whole life on Facebook.
And in order to get you to go to Facebook, if your friends aren't there, what's the point? All right, so that's why these other upstart social networks have so much trouble displacing Twitter or Facebook or what's the other one? The new one, TikTok, is quickly becoming extraordinarily dominant. You see all the TikTok competitors show up. Nobody's going to TikTok competitors. Why not? Because everybody's already on TikTok. So once you kind of get in there and get embedded in that ecosystem, it's hard because so many other people are using that ecosystem, which also is another thing that Microsoft has created as a barrier to competition. I think that gives them sustainable, better rates of return. I don't think any of that's going to change in 5 years, whether it's the cloud, whether it's the infrastructure business, et cetera. So I think you're going to see them continue to outperform the industry over time. Okay? So again, my suggestion to you when you guys are working in this on Monday is number one, spend time this week with your teams working on this, and then just practice, All right, because 10 minutes can go by really, really fast. You guys have a lot to cover, because the other important thing you're going to be talking about is you're going to be talking about Dentsu. Remember, Dentsu has 3 segments. And so you just have to be very efficient talking about this, making sure you cover it all, okay, as you're doing your research. Dentsu is also an international company, but it shouldn't scare you, right? Because number one, you can do research about these global markets and using this tool here. It's just, just a different type of analysis. All right, questions, comments, concerns about any of this? All right, so the other thing I'm going to do, since homework 4 is technically due the same day as our group projects next week, what we're going to do is on Wednesday, I'm going to call it a Bloomberg Lab class. I'll introduce as we get started, but basically I'll let you work on homework 4 during class, okay, just to get you a start on it. So if you complete homework 4 during class and submit homework 4 during class or shortly thereafter, then you can focus the rest of your time on Monday on just the group project, okay? So rather than making them both, well, it'll still be due on Monday, okay, so you don't finish in class, but I'm going to try and give you time in class on Wednesday to work on that. You can also work on Wednesday, and I'll be here to kick this off, with your teams on your group project. So take advantage of that time on Wednesday to do both homework 4 and get all the data for Dentsu. But I would also start getting the data for Dentsu today, for example, if you haven't already done so. All right, remember TAs have office hours on Thursday, Friday, and otherwise, where is the sign-in sheet for attendance? Make sure you sign the sign-in sheet before you leave. And other than that, I'll see everybody on Wednesday in this class, and everybody in all the sections that are listening to this video, I'll see you guys on Monday. Have a good rest of the week.